Welcome to tonight's special edition video brought to you by Insider Access. This is free for the public, for everyone to see, and it is an NVDA exclusive trading strategy video, but you can apply this concept to all of your trading, and I really want everybody to watch this because it may seem counterintuitive. To some it might blow your mind, to some it might just be a good reminder, but it's really going to help with your trading strategy, and I want to go over a few things regarding NVIDIA. So I want to first note that coming into earnings, I was very bullish on NVIDIA, right? And this is important because I'm going to explain some of the technical details that help you trade better. And what I told insiders within Insider Access is I was bullish on NVIDIA. So you might think, okay, so you called out calls for everybody and everybody in Insider Access made 5,000% or 50 baggers or whatever people call it. No, not at all. I'm going to pull up the screenshot that we have from Discord. And of course, I have some of this blurred out because we have some trade ideas that we're working with. But what I put out was insider view in no uncertain terms, as our view has been reiterated and reiterated over again, that we inspected NVIDIA to meet or exceed expectations. But the challenge isn't just calling up and down, it's evaluating opportunity, and both calls and puts are getting torched. Our work is top of the heap and it shows over and again. Much more to come this evening. Price hasn't settled, and I said we do expect a push up to continue and look to attack in the AM. And of course, this was yesterday in the this was post NVIDIA earnings and into the after hours where we're seeing NVIDIA, just under 1,000 here. So I was saying, yeah, I do expect we're going to push up. I believe we're about 945 at this point on the price action. And so I just want to pull back from this and say, well, we expect to push up and we'll take advantage. So why didn't I want to attack the price? Well, let's take a look here, right? So if you're thinking you could have just bought some calls and sold in the morning, you'd have made money, right? Because that would make sense. 948 close, 948 and change. We open up here at about 1019, right? You should make money. That's a substantial move. You moved them almost 70 points. Well, let's take a look. Let's take a look at some of the contracts that people might normally purchase. So let's start by looking at, the 1,100 calls. And so here are the 1,100 calls, right? This is a reasonable premium amount somebody might pay when you're swinging a trade, when you're taking trades. To some people it's actually expensive because they don't like paying for contracts that are this expensive, but this is what people tend to swing. This is what you see with the average retail. People tend to swing maybe a $1, $2, $3, $4, $5, etc. contract, right? Okay, well, what would have happened? Remember, we saw what NVIDIA did, so we're thinking it skyrocketed 948, open about 70 points up. You're going to make money on calls, right? So I must make no sense in that regard, because why would I tell insiders, look, it's not just about calling up or down, it's evaluating the opportunity and the cost of premium. And I think people are going to get torched on premiums, even though we do expect to push up. So it's not a matter of just having the stock right, because at the stock right, it's that extra step of you got the stock right, but you also understand how to evaluate opportunities. Let's see what happened, right? Here's calls. The NVIDIA calls, 24th of May, 1,100 calls. Good price on the premium, 322. What do you open at? You open at 141. You've lost 50% of your value at open, and you're thinking, what's going on? Price went up. It didn't go my direction. Well, that's because a lot of the premium is being stripped out on the IV. So there's an implied move here from the markets, and that price is being sold off now because investors are looking at it saying, okay, the move's been made. We're at 1019 and change to open. I'm not giving you a high premium for a move to 1,100 from here. That would require another 81 points by expiration. And so you barely get close. You don't even quite make it back to break even at the peak of the day. So then you might think, well, I would have spent a little bit more money. I'd been willing to go deeper in the money. So what if we go with, 1090, right? Let's push down a little bit. No, it still doesn't work, right? And even further out, if you're going like 1150, 1200, you don't want to pay $3, $4, $5 for a contract. You want to pay lower. It gets worse. But at 1090, look, 395 at open, you're at 216. You've lost over 33%, right? If you like some of the contracts that are lower priced, well, let's take a look. Let's say you went with, 1150, right? If you went with the 1150s, again, getting torched on this, right? 1150s. We'll see where we close out. So this is, take a look here. Yeah, so we get the close on the 22nd, right? And then the open on the 23rd, tanks. So yeah, you could have paid yesterday, around $1.38, $1.50 at close. What are you at for open? 46 cents. You have a third of it back. But what if you went with 1080s? You're paying a little bit more of a premium. You don't want as big of a drop off, right? You're willing to go a little bit harder. Okay, so you closed out 534. Again, open 294 and change. So my point is, you get crushed on so many of these contracts, and you really have to go all the way back down to where we start getting towards the 1050s. And at the 1050s, you start to find a little bit of value where you're almost around break even come the open, right? And you oscillate around there. But on the rest of these contracts, and now we're up to, $8-9 per contract, so $900 per contract. Most people are working far deeper, and you could have been torched on the $800-900 contracts. So these are the calls, and to a normal person who doesn't understand how it works with IV, you would have thought maybe, hey, shouldn't we shot straight up because NVIDIA made such a jump? How did we lose money on all these contracts? That's the importance of understanding when premiums are too high. Look at what the premiums are and look at the implied move, right? So if you're seeing that there's a high price on the $1,100 contracts and you're seeing that there's a high implied move on the stock, that means it has to satisfy that move just to get you to approximately break even, because it's what the markets are pricing in. So yes, maybe NVIDIA moves up. What if NVIDIA moved up 40 points? I think we could all agree 40 points is a good move, right? You're up $40. Every single one of those contracts would have been crushed, even harder. So it seems counterintuitive because typically if you buy calls and the stock goes up a lot, you're going to make a lot of money. Not in this case. So what I did with insiders, yes, my note here was that we will look to attack in the AM. Well, if you'd have taken in the AM after some of the IV had been drained out, you have a completely different opportunity because now you're dealing intraday. A lot of the IV has been bled out of the price of the contracts, and you could play the move. You could play it to the upside, to the downside. So we did open up an idea with an insider access on this. Our idea is successful, and as of right now, we're running ahead. It was a swing trade. But what I wanted to help everybody understand is make sure you understand the implied volatility on a contract move. Not every contract will run your way when you're working with options just because the stock does. And that's one of the things that drives people crazy, makes them feel like the market's rigged. I got it. It went my way. It went up this much and I still lost money. I want to make sure that everybody understands. That way you can be empowered and trade better. All right, guys, that's it for tonight. We'll talk soon.